Hi there, I'm Sam Thacker of Business Finance Solutions. Since you occasionally provide referrals to our company, we have produced this short video to help you understand what makes the best invoice factoring candidates. As usual, if you have any questions, please feel free to call myself at 512-990-8756 or Francois Sluca at 512-923-7663. As you already know, invoice factoring prospects come in all shapes and sizes, but there are a few common characteristics that make the best prospects. The most important characteristic is that the business prospect sells goods and services to other businesses or governmental agencies. We call this B2B or B2G. Unfortunately, we are not set up to support invoice factoring for businesses that sell to consumers. Invoice factoring companies prefer high-quality debtors. In our terminology, the customer of our client is the debtor. What makes a debtor high quality is they pay their bills on time and have a credit report that demonstrates that they are financially sound and able to pay their bills. When a potential client only has a few debtors, the credit quality of the debtor is even more important. Good invoice factoring prospects are ones that can benefit from having improved working capital or improved cash flow. Lastly, the less complex the product or service that our prospect is providing, the easier it is to factor. Complex products like custom software or construction progress billings are more difficult for invoice factoring. As we mentioned in the last slide, the quality of our client's customer base is important. The best debtors are medium to large corporations. Publicly traded corporations are the best because their financial information is publicly available. Governmental entities are also good debtors because government organizations typically pay their bills on time, and also because there is a special law in the federal government that protects lenders and invoice factoring companies if it is a U.S. government receivable. Complex terms of sales are more difficult to factor than simple terms of sales. The most simple term of sale is net 30. That means the debtor is agreeing to pay the client in 30 days or less from the time the goods and services have been delivered. Some industries have terms as short as 7 days. Across most industries, the average number of days to get paid is about 45 to 55, which is ideal for factoring. Small debtors often do not have Dun & Bradstreet reports. If the credit limit for these debtors is small, there is usually no problem. Larger companies have extensive credit reports from all credit reporting agencies and therefore are easier to factor. There are certain kinds of debtors and invoices that cannot be factored or are difficult to factor. Consumer sales fall into the category because they are not factorable. Third-party medical receivables can be factored by specialty factoring companies, as well as construction factoring companies that finance construction-related projects. We cannot overemphasize the importance of debtor quality. Every factor sets a credit limit by debtor based on their experience and the information they find in one of the major reporting agencies. The stronger our client's overall customer base is, the easier the credit process will be. Because of some special characteristics in the transportation and shipping industry, trucking companies and shippers are also very easy to check and approve. While there may be a few governmental entities that are not creditworthy, most make excellent debtors. As we have already said, publicly traded companies make good debtors because their financial information is easily researched. We have spoken a lot about debtor quality, but during the process of setting up a factoring client, the cash flow of the client is examined. A good invoice factoring prospect will benefit by having better working capital provided by invoice factoring and will see an increase in profitable sales. Some of the invoice factoring candidates can benefit by taking trade discounts and by avoiding penalties for being late in paying for goods and services they must buy, as well as governmental payments like sales and payroll tax. Most business owners find that having the benefit of invoice factoring will allow them to sleep better at night. This is because we are reducing their collection period from 45 or 55 days down to 1 or 2 days. Seasonal businesses can benefit by using invoice factoring just before their season begins and stopping just after their season ends. This is particularly true of the wholesale distributors who import goods from overseas to be sold in retail stores during the Christmas holidays. Cyclical businesses are businesses who experience cycles that may last for 5, 6, 7 years. Invoice factoring is particularly valuable when an industry is moving from the bottom of a cycle towards the top of the cycle. We would call this the growth part of the cycle. A good example of a cyclical industry is the oil and gas service industry. When considering prospects for invoice factoring, it helps to look at the product or service the company provides. As we mentioned in the first several slides, the simpler the product, the easier it is to provide invoice factoring. Service companies that provide their service charged on a time and material or time and expense basis are also very good invoice factoring clients. An example of this type of client might be a staffing company. Most staffing companies charge an hourly rate or daily rate for their employee and are reimbursed for certain expenses the employee has. Invoice factoring companies care about a potential client's bad debt and a percentage of sales that are returned because of defect or warranty. This is especially true in the retail trade. The lower the percentage of goods returned, the better. Invoice factoring companies especially don't like to factor companies that have a high possibility of future monetary offsets. This is common in the construction trade because of progress billings. It is often also found in retail trades because a store may charge a manufacturer or distributor fees for simply being on the shelf. When we talk about a clean purchase order, what we mean is that few stipulations exist that would allow the buyer to return a product or not pay for services provided. Software and high-tech companies do not typically make good factoring clients unless they have a success rate. Construction companies and any companies that provide a service based on progress billings or percentage of completions are also not good candidates. An invoice factoring company wants to be sure that the title to goods are transferred cleanly from our client to the debtor. Consignment sales are typically not factorable because title does not transfer until the good is sold from the debtor's shelf. We've already spoken about construction factoring and third-party insurance receivables. Both are factorable by specialty factors that have experience in these industries. This flowchart demonstrates the best way to look at a client to determine how good they are for invoice factoring. It's a flowchart. If you look at the flowchart and you start at the top, the first question are they B2B and also B2G sales? If the answer is no, you stop. If the answer is yes, then you look at the debtors. Now, we don't expect you as a referral source to know a good debtor from a bad debtor, but we can help you with this. When the good debtors are present, then we can keep moving. Next is a question about factoring volume. This is the amount of dollars a client expects to sell to an invoice factoring company on a monthly basis. Although we can help companies that want to factor less than $20,000 a month, our preference is companies that are much larger. Next, we look at the product or service to see if it's a simple one or a complex one. If it's a complex product, we ask the question, are there mitigating factors that help make this a factorable company? If the answer is yes, we keep going. Lastly, we look at the benefit to the company. If we can see that the company is going to grow profitably or have another financial benefit for factoring, then we can keep going and we can get an application and proceed with the deal. Some historians believe factoring invoices go back to the days of the Roman Empire. We certainly know that it has been used in the United States since the days of Benjamin Franklin. Sometimes we still have to overcome some of the old negative images of factoring, but once we demonstrate how a company can grow profitably using factoring, they feel comfortable. Of the thousands of factoring companies in the United States, there are mostly good ones, but there are a few bad ones. We spend a lot of time making sure the client understands the strengths and benefits of a particular factoring company before we place the business with them. We spend time educating our client on the best ways to use factoring because we believe a good user of invoice factoring will thrive. The chances are good that if you sell goods and services to a big company like Walmart or Boeing, or thousands of other companies like them, you will find many of their suppliers are using invoice factoring. Large companies understand this, and most work easily with their suppliers. The most important thing to remember is that because banks are not making loans to small businesses like they did 15 to 20 years ago, invoice factoring is a reasonable alternative in today's tight credit climate.